Hi there, I'm Mark Sebastian, founder of OptionPit.com with the AM Volatility Report. Reminder, this is for educational purposes only. None of this should be considered investment advice. Consult your financial professional. Options have a word that starts with R and rhymes with TISC, otherwise known as risk. Consult your financial professional. Folks, we're going to be, we'll have our boot camp coming up pretty soon. Look for some sort of webinar from us maybe next week or on a Saturday in the following, sometime soon. Hoping everybody just be on the lookout for that. So let's talk about the market. Well, the word is out. It's official. We are going to be raising rates. That is what Yellen said in her speech today. And what is our response? We're up. We're up. We're racing toward all-time highs. Dow is up. RUT is up. NDX is up. Everything is up. But really, volatility is getting smushed. An absolute vol slap on very little rally. I think it goes to tell you that the market is willing to accept changes in monetary policy when there is changes in fiscal policy adjoining it. Maybe not as much when it's just on its own, and maybe that's what's changed it. There's a belief that there's going to be fiscal stimulus that will take the place of monetary stimulus, which may or may not be better, but for right now the market is accepting it as such. You can see we continue to see the financials do better. They got way overbought and then absolutely sold off yesterday, and now they're finally recovering. Maybe they're in a good spot. You'll notice that the NASDAQ, which had gotten slapped, has now kind of recovered, doing better. The RUT continues to perform. I mean, it is by far the best performer. And the S&P looks like it's racing toward its all-time high. Meanwhile, VIX, 13. VIX futures, the DEES future is about 15.4, so 2.4 with about a month to go. A little bit wide, but not crazy wide. I've seen much crazier than what we're seeing right now. All right? And you can see the entire complex is changing. There's a bid down to 12.5 on VIX itself, and volatility is absolutely in. So then, Apple, which had a screaming up day yesterday, off a touch, not a huge hairy deal, and bonds which had been slapped are off again, down to 120. Bonds finally taken in the chin. Took a while, but they're finally wearing it. And then with that, you look at USO. Dollar's been strong, but oil seems to have recovered. We continue to see strength in European banks. So as a whole, the market looks pretty green. All we're seeing is a little bit of red from some of the names that had kind of really overdone it, and from the bond market. Lock in those mortgage rates, folks, because it looks like prime is going to be going up significantly here over the next few weeks and months. The 30-year mortgage is already rallying pretty quickly, so we could see one of two things: just people stop buying houses. I find that less likely, or more likely, we could see a influx of demand from housing, followed by a real slowdown as people look to refi and do everything they can to get their rates as low as possible. Those are kind of the pieces we're seeing and we find interesting. In terms of other volatilities, you can see VXN now kind of back to normal, still trading at a huge premium. RVX, if there is a stiff premium, it's RVX, but who wants to sell a condor into the type of momentum that RUT is showing? Very difficult. So if someone wants to sell something, it's going to have to be done as a directional opinion. I'd rather sell an RVX future or own RVX puts than actually trade around RUT itself. But as you can see, those suckers are so wide, it's very difficult to trade. All right, folks. On that note, I hope everybody has a great day. If you have questions, email me marketoptionpit.com or call me 888-TRADE-01. Have a good one.